When taking your first step into your cryptocurrency investment, one of the most difficult decisions is not to choose what to invest in first, but to choose when to invest. Fortunately, this so-called dollar cost averaging system eliminates all guesswork, making it ideal strategy, especially for newcomers to the market. In fact, it will be an ideal tool not only for newcomers to the market, but also for those who think about investing and saving money at the same time and who like the return and even low risk. Then let's examine together how both saving and investing money in the bear market will make us more money. Welcome to Kripto Ofis channel, I'm Iryna. Whether you want to invest $100 or $100,000, there will always be a fear that the market will crash and you will lose money after the initial investment. It's a very normal feeling. People subconsciously want to feel safe all the time. On the other hand, the thought of missing a rally is equally daunting and often compels investors to invest in a hurry. Well, let's get straight to the point. How will we make our investment? The method so-called dollar cost averaging is a technique that has been used for years not only in crypto markets but also in all investment instruments. In short, this is the process of investing your money over time. Instead of investing in a single investment instrument once and waiting the market to turn to your advantage, you divide your investment into several tranches and trade for a certain period of time. It is possible to give the following example. If we have $1,000 to invest, we can divide the year into 4 quarters and invest $250 in 3 months. Or by investing $20 a week for 1 year, we can both fend off our bull market expectations and already have a saving without forcing ourselves. We can continue this until the bull market. You don't even need to make such a wide variety of baskets. We can do this through a single investment tool such as Bitcoin, Ethereum, Avalanche, Polkadot, Polygon. If you ask why others are spending more money than others, you can watch our video titled "Why Are There So Many Cryptocurrencies?" Explaining this system to CoinDesk officials, Cory Klippsten, CEO of Swan Bitcoin, said, "In a bear market, you save using the dollar cost average, and using the dollar cost average, you sell some or all of the savings when we come to a bull market. In this way, you will make much more profit than the pension systems and the money you deposit into a classical bank account." He says that if you make this system for 8 to 10 years like the individual pension system, it will allow you to save the mortgage cost of a house and even the money to go on a world tour before retirement. If you ask who is this Cory Klippsten, we can say that he is a famous management strategist who has touched more than 50 startups as a mentor and investor and previously worked for Google, McKinsey Company, Microsoft and Morgan Stanley. In the continuation of the interview, Klippsten states that daily traders, futures options and those who buy heavily on a single instrument rival the million-dollar positions of big companies such as BlackRock, Alameda Research and Andreessen Horowitz, and this competition will most likely not work out in your favor. He further states that these guys are hungry wolves and they distribute everyone's margins by moving the market according to their volume. Accordingly, he says the best investment strategy is dollar cost averaging, which can save little by little and standardize the average profitability. Of course, even for such assets that only perform over the long term, profitability depends on the investor's timeline. According to the chart published by a trading platform, we can see that an investor who accumulated $100 worth of Bitcoin per month 2 years ago and invested a total of $2,400 2 years ago has now lost about 37% of its value. However, if exemplary investor had started the same strategy a year ago in October 2019 and had not even sold on the bull era ATH, he would have made 20% profit from his current $3,600 deposit. Even if he had sold during the bull period, the profitability level would have been around 300%. In other words, when we will break our savings depends on when the bull market will come, and waiting for the bull is much more exciting than one might think for someone who uses this strategy, because in this sense, the longer you invest, the more profit you will make. If the market falls and stays low for a long time with this strategy, you will have made much more profit until the next next year. The dollar cost averaging strategy has one more benefit that is far greater than profit, and that is your psyche. Many investors can get their hands up from smartphones to trade crypto in our country. Constantly checking prices and constantly scrolling through social media has become dangerously digital addiction. Many of us stepped into the crypto world because the current financial system is no longer likely to make us money. However, in the crypto world, we should not use the same strategies as in traditional financial system, but with tools that allow us to improve ourselves and our investment strategies. As Kripto Office, we will continue to research such solutions in order to be able to profit from the bear market we are in and to build the right buying strategies. If there are strategies you know, please mention them in the comments, and then let's discuss the result together. As always, we would like to remind you again that what we say is not investment advice, and we recommend you to do your own research. And always remember, your decisions to trade depends on your attitude to risk, your expertise in the market, and the spread of your portfolio, and how comfortable you feel about losing money. You should never trade with more money than you can afford to lose. See you in the next video. Invest in crypto smart and stay cool.